Student debt. The loan payments have resumed. What does that mean for investors, and what does it mean for you? This is a special conversation right here on UBS Trending. Ainsley, I'm actually very excited to have a candid conversation about student loans because sometimes it feels like there's this stigma around talking about student loans or having them, but there shouldn't be because a lot of people had them. I had them when I graduated. It's actually one of the largest debt markets out there. It's right up there with auto loans. Mortgages are number one, but it is a large market. I know you spend a lot of your time talking about wealth planning, and of course, student debt is very relevant. So what are some of the questions that you're getting?
Yeah, we've definitely had a lot of questions coming in, whether it's from someone who is about to have to start making those student loan repayments again, or whether it's a family, a couple who's looking to save for their child's education. They're asking, what should I do if I have a child and need to start saving for the college education? And then for those who are a little bit older who have the student loans.
So I think the question right now is, will these payments resuming be the straw that broke the consumer's back, right? And we actually think that it should be surmountable or digestible by the strong economy. The excess savings that investors have been looking at or not as depleted as originally thought. We got an updated data set and it looks a little bit better than originally thought. So we do think it should be surmountable, but we do see some risks in the student lenders themselves. So I can talk a little bit more about that.
So sorry, but when you say risks, when it comes to the student lenders, are you talking about it, you're talking about it from an investor or an investment perspective, is that correct? So for someone who's looking to invest in, let's say, a private lender, that these are the risks that they should be concerned with. That's what you're speaking about, right?
That is what I'm speaking about. So we have an education services long-term theme. But when I'm thinking about long-term investment opportunities, and I think about these student lenders, so publicly traded companies that operate in the student lending market, I see essentially two types of risks. One is credit risk, and the other is policy risk. It's hard for us to see what that looks like in 5 or 10 years, right? Will policy change dramatically? Will there be some type of forgiveness plan? We just don't know, and we can't say for sure today. So when I'm calling something a long-term investment, it's hard to do that with confidence without thinking about some of these risks, again, for those publicly traded student lenders. Just a few years back, we did see one of them settle claims on predatory lending. So I think that just highlights some of the risks that are out there. And prior to the pandemic payment pause, so again, we had the stimulus where payments were not due, so you couldn't default. But prior to that, student loan default rates were actually higher than any other type of debt. And you can see we've got a chart that really illustrates just how high they were before that pandemic pause, right? Again, I mentioned that you couldn't default starting in March 2020. So that's why you see that drop down, but they were very high before that. So there's that credit risk I was talking about. Education services is much broader, so I won't delve into that today, but the full report is out there for those who are interested. But let me pause on the market context for a minute and just ask, you from your perspective in terms of planning, what are some of the options for, if you have kids, or what should you be considering when you're looking at some of these different types of repayment plans? Any tips for us?
So let's just start for someone who has a student loan. First of all, if you have a private student loan from a private lender, you likely have not been able to benefit from the recent COVID relief that has recently unpaused, I guess you could say, or started back again, because the COVID relief did not apply to the private student loans. So if you are someone who has a government student loan, you are then the one who's going to be having to make these payments again because the pause has essentially been lifted. And so for you, there are a few different options that you have available to you, one of them being an income-driven repayment plan. And what that is essentially, let's say if you're someone who isn't able to make the full payment on your loan, or if the payment is too high, you're able to apply for this repayment plan and say, okay, this is what my income is, this is how large my family is, and it will basically tell you what your payment is able to be based off of your income. There are a few different ways that you can do that, but recently there's become a new plan. It's called the Save Income Driven Replacement Plan. And what that enables you to do that the other plans don't allow you to do is that it allows you to make a lower monthly payment, and it also allows you to hold off on accruing interest on the payment if you're able to make the full payment on your principal. So it's a little bit confusing, I know, but I think the most important thing is to make sure that you are taking the time to understand how your student loan works and also what the different options are.
Right, exactly. So almost as an example of that, like if, say you did qualify for that plan, because that's number one, you have to qualify. But if you did qualify and you were able to make that minimum payment, but the interest that was accruing each month was actually surpassing that minimum payment, they'll cap that interest accruing. So essentially you'd be static rather than actually seeing loan growth month to month, which actually can happen. So definitely really important to check out some of the terms and see what works best for you there. And I want to ask you, because every May, I know that you write about 529 Day. So can you tell us a little bit about what that means? If you're a parent, is it too early to start saving if you have young kids, or what would you recommend for them?
It's definitely never too early to start saving for college education. It's honestly never too early to start saving for anything, because time is on your side when you're making investments and saving for a future goal. So if you are someone who has a young child, or even if you don't have a child yet, my sister is about to have her first child, and she actually called me and said, hey, when should I start saving for my child's college education? And I was just so excited for her, because that isn't something that a lot of people think about, but what she's looking to do is open a 529 college savings plan like you were talking about. And what she can do is she can start saving even before her child's born. She just has to designate a beneficiary, which could be herself, have a successor beneficiary just in case anything were to happen to her. And from there, she can start saving for her child's education before he's even born if she wanted to.
One thing I wanted to mention is I actually know someone who was targeted as part of a scam. And essentially the scam was that they were going to offer to help apply for forgiveness, and essentially using the fact that it is confusing and they were there to help, right? You should not have to pay to apply for forgiveness. And another red flag too is if you get a call and they're trying to make you make a quick decision, right? That can be a red flag as well.
It's certainly a pretty terrifying topic, and it's sad to see that people are taking advantage of such a complex topic, but it's not even that anyone can find this confusing. I certainly find this very confusing, and I've been looking at this for years. I wanted to mention an interesting statistic that I saw the other day. It was from a survey that was taken in 2020, and it said that 27% of millennials who had student loans said that they did not understand how interest on those loans worked when they initially took those student loans out. And so it's a little scary to think about someone taking on such a large loan and not understanding how it works, because if you don't understand how it works, it can really, you might be taking certain actions or not taking certain actions that are going to impact your financial plan in the long run. So I'd say it's really important to make sure you're taking the time to understand how that loan works. If you're not sure, just ask someone, whether it's a parent, a friend, or a financial advisor.
Absolutely. I think that's a great way to end. Make sure that you explore those resources out there. Ainsley, thank you for covering a lot of those resources for us here today. And I look forward to talking more about it in the future. For more information, visit www.ubs.com/views. UBS Trending is on social media. Follow us on Instagram @UBS Trending for content that you won't find anywhere else. You can also check out LinkedIn, Facebook, and Twitter for more. As always, if you have any questions about your portfolio, please speak with a financial advisor. Until next time, I'm Michelle LaLiberty. Have a great day. Remember to keep your eyes on what's trending.